Ladies and gentlemen, good afternoon everyone and welcome to the PG Electroplast Limited Q4 FY25 earnings conference call hosted by JM Financial Institutional Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. This presentation has been prepared for informational purposes only. This presentation does not constitute a prospectus, offering circular or offering memorandum and is not an offer or initiation to buy or sell any securities, nor shall part or all of this presentation from the basis of or to be relied on in connection with any contract or investment decision in relation to any securities. This presentation contains forward-looking statements based on the currently held beliefs of the management of the company which are expressed in good faith and in management's opinion are reasonable. The forward-looking statements may involve known and unknown risks, uncertainty and other factors which may cause the actual results, financial condition, performance or achievements of the company or industry to differ materially from those in forward-looking statements. Those forward-looking statements represent only the company's current intentions, beliefs or expectations, and any forward-looking statement speaks only as of the date on which it was made. The company assumes no obligation to revise or update any forward-looking statements. I now hand the conference over to Shalin. Thank you and over to you, sir.
Thank you, Anushka. Good afternoon, everyone. And on behalf of JM Financial, I welcome you all to the Q4 FY25 earnings call of PG Electroplast Limited. We have with us the management represented by Mr. Vishal Gupta, Managing Director of Finance, and Mr. Pramod Gupta, Chief Financial Officer. I will now hand over the call to the management for their opening remarks, post which we can open up the floor for question and answers. Thank you, and over to you, Mr. Gupta.
Thank you, Shalin. Good evening, everyone. Thank you for sparing your valuable time and joining this call today. Hope you all are doing well. I'm being joined on this call by Mr. Pramod Gupta, our CFO. We have already shared our results presentation and hope you have gone through that. Financial year 2025 has been another remarkable year in the growth journey of PG. With several milestones, the company has done capacity enhancement and scaled up its product business significantly in FY25. Now the company is leveraging its size and partnerships to drive innovation, reduce costs, and elevate quality standards. And as client expectations for faster turnarounds and greater customization continue to grow, scale has become a defining competitive advantage, enabling PGEL to optimize sourcing, streamline production, and deliver exceptional value. For this financial year, our operating revenues for the company has grown by 77% and crossed 4,869 crore rupees, with the product business contributing around 72.4% of the total operating revenue. EBITDA increased by 81% and stood at 519 crore rupees, and net profit rose by 112% to 291 crore rupees. The company has posted an industry-leading growth in product businesses, and operating revenues for the product businesses crossed 3,525 crore rupees in FY25 with 111% growth. This is even though when ASPs in certain categories are down by up to 5% on a YOY basis. The room AC business contributed 3,009 crore rupees, which is a 128% growth on a YOY basis. The washing machine business had growth of 43% on a YOY basis, and air cooler business has also grown by 80%. Order book and visibility for the product business remains robust, and the company is on track to grow the product business significantly again in FY26. Our new product offerings in washing machines and room ACs have received a very good response, and the company continues to see increased interest in its product offerings from new and existing clients, and we remain very confident in the future growth prospects of our business. Business momentum is underpinned by our disciplined approach to efficient capital allocation, with a strong focus on enhancing asset turnover through sustained growth in product business. This strategy has been the foundation of our success, fueling industry-leading expansion while ensuring best-in-class return ratios. As we accelerate forward, we remain committed to achieving market leadership, leveraging our strengths to set new benchmarks in operational excellence and financial performance. For FY26, our operating revenue guidance stands at 6,355 crore rupees in PG Electroplast, which is a 30% growth over FY25 numbers, and at 855 crore rupees in our JV company, Goodworth Electronics, which is a 57% growth over FY25 numbers. This implies an operating revenue of 7,200 crore rupees at a group level, which is a growth of around 33% over our FY25 numbers. We are also guiding for a net profit of 405 crore rupees in PG Electroplast, which is a growth of 39% over FY25 net profit of 291 crore rupees. The growth in product business is expected to be around 35%, from 3,526 crore rupees to 4,770 crore rupees in FY26. The capex guidance for FY26 is in the range of 800 to 900 crore rupees. The company has planned to further expand the RAC capacity with a new greenfield plant in Bhiwadi. Also, a new greenfield facility is being planned in Greater Noida for washing machines. The company is on the verge of finalizing a land parcel for its refrigerator plant in South India. The Supa facilities will be expanded further with a new building and further capacity enhancement for the RAC business. Also, our board of directors today have approved the final dividend of rupees 0.25, that is 25 paisa per share. With this now, I will hand over the call to my colleague, Mr. Pramod Gupta, our CFO, to elaborate on the financials.
Hi, good evening, everyone, and I welcome you all to this conference call. I'm sure all of you have seen the financials in detail already. We had a very good scale up during FY25 from operational point of view. All our business have reported very significant growth over the last financial year. The company's operating revenues for fourth quarter 25 were up 77% to 1,910 crores. EBITDA grew 93% to 232 crores, and net profit rose 105% to 146.4 crores. During the Q4 and the financial year 25, operating margins have seen slight improvement due to cost control, lower commodity prices, and operating leverage. On the balance sheet side, if you look, we are now net cash company with almost 980 crores of cash. During the year, company has done significant capex of almost 488 crores in commissioning new greenfield plant in Bhiwadi, capex in Supa for RAC manufacturing, and also company has issued capital advances for land and building in Greater Noida for new washing machine facilities. As stated by Vishalji, we have guided for 800 to 900 crores of further capex in FY26. This will be funded largely by the cash that we have on the balance sheet today. Also, we hope that going forward, the growth momentum will be good. And again, I am reiterating here that the capital efficiency by sweating existing and new assets will be the key focus area for the company in the coming years. Our net fixed asset turn has crossed 5 this year, and we hope to sustain that in coming years as our capex get commissioned and we are able to fully sweat them. We remain very optimistic on the growth opportunities in our focus area, and we believe company is well placed to expand its market presence further in coming years. With this, I'd like to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of CA Garvit Goyal from Invest Analytics Advisory LLP. Please proceed.
Hi, am I audible?
Yes, you are audible.
Good evening, sir. Congrats for a good set of numbers. My first question is on the industry demand. Basically, our customers like Blue Star and Voltas are a bit cautious regarding the near-term demand, particularly due to early monsoon, or we can say delayed summer, and they are facing some rising inventory levels at the channel. But we are on the other side pretty much confident, which is reflected in our numbers as well for FY26. So, sir, please help us to understand what is giving us this level of confidence. Is it because we are further looking for increasing our market share, or what is this exact growth driver for us for FY25?
So basically, as we told that we are serving 35 plus brands. So it is the market situation is always very dynamic. Sometimes some brands are doing well. Sometimes some brands may not have their own, their issues. So for us, this business is looking very strong as of now also, in spite of the fact that overall industry is facing certain inventory issues because of the rains, early arrival of the rains. But for us as a company, we are not seeing major challenge as far as June quarter is concerned. And going forward also, we have the guidance, but we have given, we are very confident that we'll be able to meet those guidance. The only reason is because we are serving 35 plus brands, so we are able to diversify the risk and diversify those issues with us, that normally some customers face.
Understood, sir. And sir, secondly, on our segment side, you mentioned product business is going to do well and electronics also. But looking at your plastic division, so you are estimating a growth of around 10% for next year. So why this slower growth we are targeting for next year in this particular segment, sir?
So basically, the issue is the petroleum prices are on a lower trend right now. And, all plastic businesses, the prices are driven by petroleum crude prices. So we are seeing that the drop in the raw material prices, and this business being a straight path to business to our clients. So what we see that ASPs will drop. So overall volume growth will be good, but at a value level growth, we are targeting around 5 to 10% only.
Got it, sir. And lastly, on the CAPEX side, any new product that we are going to launch via this CAPEX that we are going to do next year?
So the only product what we are talking about right now is refrigerator. That is already guided. That is what I have told in the call also right now. So we are planning to put up a refrigerator plant in South India.
Understood, sir. Thank you very much, sir. All the best for the future.
Thank you, Ji.
Thank you. The next question is from the line of Achal Lohade from Nuvama Institutional Equities. Please proceed.
Yeah, good afternoon, sir. Thank you for the opportunity. Congratulations for a fabulous set of numbers. Just two questions, sir. First, with respect to the 35% revenue growth guidance for products, is it fair to say that, in washing machines, given the Whirlpool tie-up now, this can grow in triple digits in the current year, given the capacity addition, etc.?
So we will stick to the guidance what we have given to you. We will not go into those details. So this at a product business level, we are guided for 35% growth, and we'll stick to those numbers as of now, sir. And we don't go for customer-specific numbers.
Sure. The second question I had, with respect to the PLI and the state incentives, if you could help us, what has been the quantum which is booked in the fourth quarter?
Can you just repeat?
For the fourth quarter, sir, what is the state and central government incentives we have booked?
31 crore rupees, 31.5 crore. 30 crores is a PLI and 1.5 crore is a state government incentive, which we have booked.
Okay. So 30 crore for FY25, and which is accounted for in fourth quarter. Have I understood right, sir?
It is a FY24 number which we received in 25.
So in our case, in PLI, we book this on the basis of the cash only. On the basis of once we get the sanction and the money is just about to receive, we book in our books of accounts.
Understood. Understood. And one last question with respect to the compressors. Any update on the status for the compressor manufacturing perspective?
So, see, the building is already being made and the contract is being on the verge of finalization right now.
Okay. Understood. All right, sir. Great. I'll fall back in the queue for follow-ups. Thank you so much.
Thank you. Thank you so much.
Thank you. The next question is from the line of Dhananjay Bagrodia from ASK. Please proceed.
Hi, sir. Most of my questions are answered. Just wanted to ask you, now when we're looking ahead, are we seeing that now competitive barriers for other EMS players because of now PLI now becoming more and more advanced? So the players who have gone through now, we are in a very strong position to continue with that growth?
I think the PLI was just an enabler to gain scale, and now I think PLI is over in a sense that in next 2-3 years PLI will be over. Now, obviously the companies which have been able to take advantage of the PLI and grow and make scale up their business will surely have a leadership position in the segment. And as you know, the scale itself becomes a good competitive edge if it can be rightly harnessed by, leveraging your strength in customer relationships, sourcing relationship, and doing the right product development. So we think that now for any new player to come and enter and scale up to the scale is going to be relatively difficult, much more difficult. And given the fact that the players are now already established, at least for the foreseeable future, we don't see any big threat from any new player to emerge in this segment.
Sure. And so now in EVs, we've already got a foot into the door. Are we seeing more growth in that along coming, or how are we seeing that?
The EV partner, has still to get some clearances from Government of India and ARIA for launching their products. So once they get that go ahead, then only we will be putting up the plant for them to start doing the assembly and manufacturing. We are still awaiting those clearances for that our partner, our client partner.
And so, Mr. CapEx you're looking for the next year?
The total capex is going to be in the range of 800 to 900 crores. We are actually going to put up a refrigerator plant. 300 crores is earmarked for that. We're going to be spending a significant amount in compressor, and we are going to start a new greenfield facility for washing machines in Greater Noida. And we are also looking for a greenfield plant in near Bhiwadi in Rajasthan for components, coolers, and maybe at some stage doing the tool room there. So these are the plans there. In the next year, we are going to have a very heavy capex, and we think that in next 2 years we will be actually doubling our gross block from currently about 1,200 odd crores to something like 2,200 crores odd.
And but majority of that is coming in FY26 then, because if you're saying 900 will be...
Yeah. Large part of it is going to be coming in 26.
Okay. Fantastic. Actually, this is very, very good. Congratulations, sir, again, on a very strong set of numbers. Kudos to you all.
Thank you.
Thank you. The next question is from the line of Ashish Kumar from Ampersand Capital Investment Advisors. Please proceed.
Thanks for the opportunity. My first question is on PLI again. What kind of PLI incentive can we expect next year for FY26? And my second question is on the Goodworth business. How do we see it in FY26 and beyond? Do we expect break-even, and what kind of profit margin can we expect from this? Thanks.
Yeah. So next year, we expect to have a PLI of 37.5 crores, which is what is going to be our share for meeting the targets in 2025 financial year. Coming to the Goodworth, this year we did 544 crore turnover, and we had a small loss there. At EBITDA level, though, we had a profit about 1% margin. Next year, we hope to improve that. We are budgeting in about 1.5% to 2% kind of EBITDA margin in that business. And you can assume that next year we should see some profitability. Going forward, about 2% kind of a margin at EBITDA is what is sustainable in that business.
Thank you. Yeah.
Thank you. The next question is from the line of Arshia Khosla from Nirmal Bang Institutional Equities. Please proceed.
Yeah, thanks for taking my question and congratulations on a strong performance, sir. Most of my questions have been answered. I actually just want to understand the 800-900 capex guidance. It is inclusive. Is it including the backward integration that we're looking for RAC? Or it will be, I mean, it's just the refrigerator and washing machine part.
No, it includes everything: RAC, washing machine, refrigerator, and the new plant for basically coolers as well as tool room, which we are looking at. Everything.
Okay.
And compressors also.
Okay, understood. And sir, how the demand? I mean, because of the delayed summer, the demand April has been a complete washout. So how is the demand? How are we looking forward to May and June for this quarter?
See, April has been a good month for us. We were on track of our budgeted numbers. May also, we have not seen any significant cancellation as of yet. June, the month, we will see. We will watch out how things pan out. But from whatever kind of inputs we have, we think at our end, we have yet to see some very significant impact. But nonetheless, we have been hearing the stories of, South being very slow, and also because of some intermittent rains in the last 2 weeks, there has been slower sales. But, on the other hand, I will just say that the summer in North India lasts till July, so we are still in May mid, and I think there is still some room to go. More importantly, we think that because of several other changes which are happening, including, this tax reduction, etc., which happened in the budget, and also AC being a secular product, this seasonality will probably impact this or next month, but it is surely not going to kind of derail the long-term story. And we do not actually put up the capacity for business only for 1 year. In our opinion, we still remain very optimistic and very bullish on the long-term growth prospects of AC business.
Great. Thanks for that, sir. Understood. And quickly on the margin side, would you like to guide something on the EBITDA margin side as well?
I think you can assume them to be remaining flattish this year. We think the sustainable margins that we have are sustainable.
Okay. Thank you, sir, and congratulations once again.
Thank you. The next question is from the line of Kaushik Mohan from Ashika Group. Please proceed.
Hi, sir. Congratulations on this great set of numbers. Sir, I just wanted to understand, you mentioned now that you are going to get 37.5 crore on the PLI for FY26, and in the last year you got 31.5 crores on the PLI. That means on 405 crore, we are expecting 42% growth on the full year, right?
That's what is the 31.5 crores is what we got in the last quarter. Out of that, 30 crores was a PLI, which was accrued to us in the FY24. But since we received the sanction and the money in FY25, that's why it has been booked in that way. In FY25, the sales what we have done, the PLI what has accrued to us is 37.5 crore rupees, which will be accounted for in FY26. We expect to receive that money in FY26. I hope this clears this start out.
There is also one more thing. Out of that 31.5, 1.5 crores was a state government incentive in the fourth quarter. For the full year, that state government incentive was 6 crore. It is going to continue at 6 crore even next year.
Got it. That was very clear, sir. And sir, we can see that we are going for a greenfield. So how much in this 800-900 crores is allocated for the land acquisition, and how much is for the machinery acquisition? Any calculated numbers do you have?
Yeah, I think almost close to 600 crore rupees over the next 2 years are going to actually go for land building across all the 4 locations in India, like in the west, in south, in basically in North India, and in the west, in Bhiwadi, basically. Bhiwadi, Greater Noida, South India,
yeah.
Super.
So out of 800 to 900 crores, the land and building capacity is around 350-400 crore rupees. And
yeah.
Sorry, sir, I can't hear you.
See, I'll tell you exactly. See, as I was telling you, over the next 2 years, we think that we'll be almost doubling our gross block. Today, our gross block stands at something like 1,200 crore. Now, next 2 years, we think that is the kind of capex we will be doing. And we are starting 4 greenfield facilities, as I told you. And the total amount of money which we will be spending in land and building across these 4 places is going to be in the region of about 600 crores. Large part of this money is going to be accounted for in the first year. Because land you have to purchase initially, and building also you have to do construction initially, and then plant and machinery follows. I'm not going to actually be able to give you exact number of how much land and building out of this 800 to 900 crore, which I expect to be spent this year, is going to be land and building, but I think it will be a significant portion. But over the next 2 years, almost 600 plus crores is going to be in land and building.
Got it. Suppose 2 years down the line, the current year capex and the next year capex will be started giving us revenue. That means that if we maintain fixed asset turns to be 5, then we're talking about a 12,000 crore on the sales. Is my understanding right?
No, your understanding is right, but this 5 is what we have achieved. This internally we target 4 to 4.5. That is a good number, and we think that once we actually scale up all the facilities, that is what we should be able to achieve.
See, we are targeting of a growth of around 30 to 35% for next 3 years, and this capex has been planned for that.
Got it. Great. Thank you, sir. I'll get back in the queue.
Thank you. The next question is from the line of Navneet Singh, an individual investor. Please proceed.
Hello, sir. Am I audible?
Yes.
So, can you please give us some colors on some forecast on the expansion, margin expansion, or the products we have higher margin?
No, see, we are in the business of contract manufacturing. Please appreciate, margins are not likely to see major increase. Whatever gains we will get are likely to come only because of the productivity and efficiency gains. And I think, from an investor point of view, I will suggest strongly that you should focus more on the scaling up of business in terms of volume and value, and not on margins specifically. Margins, if happen, is an added bonus, but I will refrain from guiding for margin expansion in the long to medium term.
All right. On research and development side, so on the R&D side, do we have any moat on that front? Any unique product that we are planning to launch?
So we have been actually augmenting our R&D team very, very significantly over the last 3-4 years. In fact, the products which we have launched all in the last 3 years have been becoming industry benchmark. In fact, some of the brands have copied our products. In fact, the innovations which we have done, some of the innovations which we have done in our products have been very well appreciated by some of our clients. And we continue to invest very aggressively in the product side and product development and R&D side. We have been actually increasing our and strengthening our team on R&D in both AC and washing machine very, very significantly over the last 2 years.
So what is the expenditure over R&D in terms of sales?
Right now, that number will be pretty small because, see, our sales comes largely from doing the contract manufacturing. So right now, that number on an overall basis, including maybe whatever expenditure we are doing on other than manpower, maybe just about 0.5% to 0.75% of our turnover, but it is likely to see increase in terms of absolute amount. See, you also have to appreciate that we have grown very, very rapidly over the last 4 years from 700 crore turnover going to 4,800 crore turnover, 4,700 crore. It's not a small number. And out of that, today what we are spending is a decent amount of budget for the kind of business which we do, in our opinion. And obviously, it will scale up going forward.
Understood. That is all from my end. And congrats for the great numbers, and hope we see even greater heights in future.
Thank you.
Thank you. The next question is from the line of Pranay Roop Chatterjee from Burman Capital Management. Please proceed.
Hi. Hello, sir. Good evening. Am I audible?
Yes, you are audible.
Great. Sir, firstly, on the RAC business, obviously plenty of questions have already been asked, so I'll try to ask in some other way. So obviously, both the Q4 numbers that PG has shown, obviously it was a surprise anyway, positive surprise. But what was more surprising is the commentary on the growth in upcoming year. So what I wanted to understand, it might help us track your business better in case you can disclose it. In terms of secondary sales, right? Obviously, you are giving primary offtake to your clients. In terms of secondary sales, can you throw some more color on your RAC business as to how it is split geographically, right? So south, west, east, north, if you can give some color on that. And on the same lines, are these big guys who we investors keep listening to, like Voltas, Blue Star? Voltas I know is not as big for you as it was before, but Voltas, Blue Star, Havells, Johnson Hitachi, and all these guys, are these really good proxies to track your AC business?
Well, first of all, I'll tell you, I do not have any numbers on north, south, west, and east, even for my own products. The reason is that when I supply from my factory in west or a factory in north, I don't know which model is going to which destination because it depends upon the brand, where are they sending. Okay. That is point number one. Point number two is, my business actually doesn't depend only on the growth of particular brand or particular. We are servicing more than 35 brands. And also you have to understand there are multiple drivers in our business. It's not only the industry growth. It is also how much outsourcing is happening versus how much insourcing is happening. That also is a very important driver for us in terms of the growth and the business to us. So in the last 3 years or previous to FY25, actually the industry was doing a lot more outsourcing, a lot more insourcing. This year, I think the outsourcing trend has reversed. And we think and we still believe that economic sense is actually, or economic rationale is to do more outsourcing till the time this business in India remains highly seasonal. It doesn't make sense for brands to put up large capacities in such a high seasonal business. It makes much more sense to outsourcing, especially given the fact that none of the Indian brands and some of the large Indian brands are still local players. They are not still global players who are exporting and having huge round-the-year demand. That is point number one. Point number two is also that every 2 to 3 years there is a BE rating change, which also puts a lot of development and product, I will say, investment onus on the brands, because every 3 years they have to come up with new models and new categories to take care of the BE rating. So taking all this into account, I think still the outsourcing makes much more sense. Yes, but because of the PLI and the other reasons, some of the brands actually decided to put up their own facilities and they were out doing a lot more insourcing. In our case, we are working with also e-commerce, modern retail and other players and some of the other brands which are focusing only on these channels, which are gaining huge market share. And they have started to become sizable. They are also one of the key reasons for our growth being slightly better than the industry. And we think that momentum or that advantage that we provide them because of our cost effectiveness, our scale, our sourcing, our product development, R&D is actually sizable and actually helps our client partners to gain market share in the marketplace. And that is one of the key reasons that we are remaining still very confident of the growth even in the next year. Thank you.
That makes a whole lot of sense, sir. That is well accepted. With regards to your product business revenue growth, which is around 35% for FY26, the refrigerator segment for which you have earmarked about 300 crores capex, I'm assuming that will be taken, that will be reported as a part of the product business as and when it starts generating revenue.
Yeah, but in 26 there is no revenue. In 26 okay. I have not budgeted any revenues from that.
Got it. So can you throw, that is clear, can you throw some color on the business as to when you expect ideally production to start, and on the 300 crore capex, what would be the peak revenue and EBITDA margins?
These numbers I will take probably in the next conference call, because we have still just hired the team and we are just working on them. There are some internal numbers, but I don't want to share them. We are in the final stage of finalizing the plant machinery and land, and that budgeting is going on. But in the next conference call, I promise I'll actually be able to throw much more light on it. But we are very, very hopeful that we should be able to meet our internal ROC target on that business in the second year of operation, from the second year of operations.
Excellent, sir. Sir, one follow-up cross-check. You gave a detailed answer on the capex to a previous participant. I just wanted to confirm that. So doubling of gross block, almost doubling of gross block over the next 2 years. 800 to 900 crores in FY26 and the remaining, which is a smaller amount, next year. In the first year, and the reason I'm asking this, sir, is to gauge how much the depreciation cost would go up, because the implied life of land and building is very different from plant and machinery. So in the first year, out of 800 to 900 crores, I heard you say 350 crores would be land and building. Is that the correct number? Because, that's just it.
It could be actually slightly more also. Basically, we are still scouting for land in certain places that has not been finalized yet. So that number could be actually maybe 400 also, but I don't know that number. Once the land parcels are finalized, then I will be able to actually give you a definitive number. But I will like to highlight here that the land, typically if it is taken on lease from any of the development authorities, typically has a life of, if you are taking for the first time of like leases for 100 years or so. So whatever you write off also in case of land or depreciate itself also is very small amount. Okay, that is point number one. Point number two is, and even in the building and plant and machinery, till the time you capitalize them, you don't actually start depreciating any of those things.
Okay.
So,
Got it. Thanks a lot, sir, for answering my questions. Excellent quarter, and I wish you all the best.
thank you.
Thank you. The next question is from the line of Jalaj from Swan Investments. Please proceed.
Hi. Am I audible?
Yes.
Yeah. Thanks for the opportunity. Sir, wanted to understand what is the where do we stand on the compressor business right now, or the compressor plant you are trying to put in? And one more point on to is, I believe that majority of it would be for internal consumption. So should we assume as and when it comes online should lead to better margins? So how should we understand that?
See, as I told earlier in the call, the construction of the building has already started. The contract is under finalization. The plant and machinery is also being finalized. And as earlier mentioned, that majority of the capacity which is being put will be used for in-house consumption, and some part of that will be sold to external parties. And since it is for in-house consumption, it will be margin accretive.
Understood. So tentatively, when are we assuming or building in that this should get for a commercial operationalization should start from this plant?
Our target is Q4 of FY26.
Q4 of FY26. So nothing is built in the assumption for current in the FY26 guidance there?
Nothing in this guidance, sir.
Got it. And then, sir, what sort of margin expansion can we expect from this if it comes in-house?
Sir, I don't think this, maybe by that time we are able to sign off the agreement and everything is in place, I think we'll be in a better position to share something on that. Not right now.
Understood. Got it. And sir, I see that the cash flows for at least the closing for the full year are standing at a CFO stands at negative some 70-80 crores. So could you help us understand what exactly is it that we are preparing for the coming quarters that the inventory build-up has been done, or what is exactly the reason behind it?
Yeah. So if you look at our cash flow this year, basically we are carrying a very large amount of inventory, and we had a close to about 1,300 crore of closing inventory at the end of the quarter. Obviously, some of it is going to get a significant part of it is going to get shed in the April, May, June quarter, because we are not seeing a very any big challenge as of yet in the AC business. But one of the reasons also which we were carrying some of this inventory was because there was an uncertainty on account of compressor BIS related uncertainty, because BIS was getting over for some of the Chinese players, and we consciously kept higher inventory of compressor, and we are carrying that yet. So that is okay with us, and we think that during the year we will be able to utilize it for in the normal course of the business.
Got it. Thank you, understood.
Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello.
Hi. Hello.
Yeah, am I audible?
Yes, you're audible.
Yeah, just wanted to understand whether the PLI incentive 37.5 crores which I'm accounting for, is it part of the guidance or that will be on top of this?
No, it is a part of the guidance.
It is part of the 405 crore guidance, right?
Yes.
Okay, sure. And all the three new capexes which you are planning, is there none of the revenues or anything is part of the current guidance? Everything shall come in FY27. Will that be right?
No, none of those capex. Only the capex on the brownfield expansion of the capacity for AC, which will be very small amount, will be contributing to the revenues in FY26. Large part of this greenfield capex is going to be actually starting to contribute only from financial year 27.
Got it. And you highlighted the amounts which you have allocated. I think 300 crores was for the refrigeration. What was the amount for the RAC and the washing machine, Bhiwadi and Noida?
The washing machine is going to
The
be
conference
about...
is no longer being recorded.
Sorry?
Washing machine is going to be about 90 crores, and AC is going to be another 200 to 250 crores this year, which will also include some part of compressor.
Okay. Within 200 to 250 crores, it's going to include the compressor as well.
Yes. The large part of it, some part of it has already been done this year because we have constructed a building. So building augmentation will continue in the coming year. Some part of the building will come, and then there's a compressor, plant and machinery, and some augmentation to the existing plant and machinery for capacities in AC we will be doing at Bhiwadi as well as in Supa.
Got it. If you can just walk down the compressor in terms of margins, like how much can it add to our margins since you'll be using a lot of it captive and maybe you'll be selling it outside. So what the margin work would look like if we are adding capacity?
Once we are able to finalize, we will be finalizing the and signing the contract manufacturing agreement with the partner. That time we will actually detail the numbers on the margins and the impact they will have on the margins of the company.
And currently, what percentage is imported for India? What percentage of compressors are imported in India, and what percentage are manufactured domestically?
Only about 10 to 15% is getting domestically manufactured. 90%, almost 85 to 90% was getting imported. But in the next 2 years, I think all the plants, all the companies are planning with the existing companies as well as some new players are planning capacity expansion in compressors.
And that is with PLI incentives which you all would be getting.
In compressor, we have not availed PLI incentives.
Got it. Fair enough. Thank you so much, Nasir.
Thank you.
Thank you. The next question is from the line of Viprav Srivastav from Phillip Capital. Please proceed.
Hi, so I'm audible?
Yes, you're audible.
So quickly on the other current assets, why has it gone up, resulted in CFO becoming negative?
No, I didn't get it. Can you just please reply and be little clear?
Sure, sir. So what I was asking was the other current assets of the company has gone up for FY25, and that has resulted in the cash flow from operations becoming negative. So what's the reason for that? I just wanted to know that.
Yeah. In other current assets, there are two segments, two things which are actually leading to expansion in other current assets. See, we are having a good amount of GST credit which goes into other current assets because of the decent inventory which we are carrying. So that is one part which we will be utilizing in the coming months. Some part of it we have already utilized in April. That is one. And second thing is we have also paid some of the advances, capital advances to some of the vendors for plant and machinery, etc. So those things are there right now, which are part of the other current assets, which we will be actually able to utilize once the commissioning of the plants, etc. happen.
So, okay, sir. So by the end of FY26, it will be back to normal level. Is my understanding correct?
Yes.
Okay, sir. And just one more question. So on the guidance which you have given for FY26, I'm sorry if I missed this, but how much of the revenue is coming from PLI?
FY26, the revenues that will come from PLI is 37.5 crores.
Oh, okay, sir. And sir, lastly, on the refrigerator side, since you are doing a significantly large capex, what are the asset turns we can expect?
We think this number we will be able to detail to you in the next call once we will have a full numbers in place. Right now we are still in the works because a lot of calculations and things are going on in the company. Some basic estimates are there, but numbers will get finalized by end of this quarter, and then I will be able to share with you the exact estimates for the asset turns and the return ratios and margins that business.
Sure, sir. Sure. Thanks a lot. Thank you.
Thank you.
Thank you. The next question is from the line of Kush from Ananta Capital. Please proceed.
Good afternoon, sir. Congratulations on always beating your guidance. Sir, one question on refrigerator business. I think this is a new product for us. Is it a more technical product, sir? Do we anticipate any technical, know-how issues, or is it very different from ACs in terms of the product being able to be manufactured efficiently in India?
Firstly, good evening. So the team is already in place. The product team, the R&D team, and the operations team, and the project team, they are already hired. They are already working on the project. So we don't see any issue in the successful implementation of this project, launching of the products, getting approval from our customers. So the template what we have for our other product businesses, where we aspire to have a cost leadership and going forward targeting product leadership also. So this is a template we have adopted for refrigerator business also. So we don't see any major challenge in that, and we are very confident on going on this project.
And I'm sure, sir, there must be already some talk with some anchor customers who would probably anchor the facility as of now. We don't want the names, but sir, any commitments from any customers that for offtake as of now?
Sir, it won't be right for us to say this thing right now, but the project is being put only on the basis of once we have a visibility on the business.
Okay, understood, sir. And sir, about just one technical question, sir. Is PLI incentive part of other income, or is it part of revenue from operations?
It is part of revenue from operations.
Okay. And one more bookkeeping question. If you are saying 405 crore of PAT next year, so if I just do a rough calculation, are you talking of around 750 crore of EBITDA and 150 crore of depreciation plus interest plus other income and PBT of 600 crore? Is that a ballpark number, rough math, right?
No, 405 crore, the PBT is not going to be 600 crores. The PBT is going to be more like 520 or 510 crores. So we have a 20% tax rate roughly.
Okay.
And from there you can work backward. Most of the capex which we are doing this year is not going to hit us immediately. It is going to actually come and hit us only probably in the FY27.
FY27. So depreciation will go up in FY27 is what you are saying largely?
Yes.
And sir, I see significant cash on the books. So, sir, what will be our overall average debt for the year or year-ending debt? Given that there is scale up in the business, but still we have a lot of cash. So, sir, will we require a lot of debt in this financial year?
No, we don't intend to take a lot of debt. In fact, a lot of the capex is initially going to be funded through the cash lying on the balance sheet. And whatever, even if we require some debt, maybe that will be only for working capital, and that will be probably very temporary because we have a high seasonality. So typically that debt, even if it goes up, it also comes down very significantly after June. So I don't think, but that will be the case because they will be having very healthy internal accruals also next year. And even now, this year, we had close to 500 crore of EBITDA. So next year, we think we should be able to, even if you assume the margins remain stable, which is what is our guidance also, then we will be having over, 650, close to 650 crores of EBITDA. So that should take care of our working capital requirement, which we may have. So I don't foresee a huge increase in the debt even next year after the capex of 800 to 900 crores.
Understood, sir. Thank you. And all the best, sir. I'm sure, as always, you have always beaten the guidance. So I was assuming a 450 crore PAT when I said 600 crore of PBT. So, sir, all the best for the next year and beyond, sir.
Thank you.
Thank you, Kushti.
Thank you. The next question is from the line of Akhil Shah from Yes Securities. Please proceed.
Hello, sir. Am I audible?
Yes, you're audible.
Sir, my question is regarding other income. It has gone substantially up from 13 crores in FY24 to 35 crores in FY25. So any reason behind it?
I'll give you the reason exactly. The interest has gone up significantly. One is obviously on account of the business. Business has seen a very sharp growth, especially the AC business. Room AC business, even in the fourth quarter, actually had 100% growth, over 100% growth. So that is one of the reasons, because it's very working capital intensive. Also, if you will see closely, you will see that we have seen some improvement in number of working days, especially on the receivable side. And one of the reasons because of that is that we have been able to get use the vendor programs of some of our clients, where we can actually discount our receivables and get our money early by giving some factoring kind of arrangement, reverse factoring kind of arrangement, where the interest we have to bear. So because of that, also the interest cost has gone up during this quarter. The reason and why we have utilized those is that we have done some of the FDs which are at very attractive rate, and it made more sense to actually do and utilize these vendor program reverse factoring vendor programs of the clients, and which were at a competitive rate in comparison to the FDs which we have right now.
Got it, sir. Thank you.
Thank you. The next question is from the line of Vijay Bhatt, an individual investor. Please proceed. Mr. Vijay, I request you to unmute yourself and then speak. Sir, it seems like the participant's line has got disconnected. Shall I move to the next?
Yeah, please move to that.
Okay. The next question is from the line of Kaustav Ray, an individual investor. Please.
Hello. Yes, Mr. Kaustav.
Hi, sir.
Please go ahead.
Hello. Yeah.
Yes.
Hi, sir. Congratulations on a great set of numbers. I would like to understand that you are projecting 35% growth in the product business. Now, we know there is some compressor issues. So how do you tackle the compressor issue? Do you think the BIS issue will be settled, or how will you really address the compressor issue to achieve this growth? And the related question in the projections. Oh, sorry, maybe you carry on. I will ask you later. Yeah, sir, please.
So, Government of India has recently issued a notification where they have allowed the import of compressors for 1 more year. So you can import compressors up to 15th April 2026. So compressor availability, which was seeming to be an issue till 2 or 3 weeks back, is largely resolved for at least 1 year, and hopefully by that time our compressor factory should be online.
Okay. And on this compressor, are you planning to import all components and then assembly, or there is plan of manufacturing some of the components also?
Some parts will be localized.
Yeah.
Some parts will be localized, Kaustav, and some parts will be importing from the overseas. Details cannot be given as of now till the time we sign off our agreement.
Okay. Thank you, sir. And the other part, in the projections which you are giving on the revenue numbers, is there the EV business also part of that projections, or the projection is only of the rack and washing machine and refrigerator?
So the guidance numbers what we have shared is for PGEL separately, and for Goodworth Electronics, which is a JV company where we make TVs, has been given separately. So for good work, the projection is around 855 crore rupees. And for the PG Electroplast, which combines product business, molding business, tooling business, our other electronic business, which is around 6,400 crore rupees. So total is coming around 7,200 crore rupees at a group level.
Okay. Thank you, sir.
Yeah, please. Thank you.
Thank you. The next question is from the line of Neeraj Agarwal, an individual investor. Please proceed.
Can you hear me?
Yes, Neeraj ji.
Sir, congrats for the great set of numbers. I would just like to check on the inventory. So there is a very high rise on the inventory, much more than our revenue growth. So any specific reason for that? Is there due to some kind of product mix change? So would like your guidance on that. And secondly, like the 30-35% growth that you forecast, that is going to be for the next 3 years, and what could be the growth beyond that, if you can give some guidance on that as well. Thanks.
See, the inventory numbers are on a higher side, as I just told earlier. Because of the uncertainty on the compressor availability, we at a company level have taken a strategic decision of stocking the compressors. So in order to secure our AC business, that is why we are seeing some elevated levels of inventory. Coming back to the second question, see, we have already guided for 30-35% growth for the FY26, and we hope to maintain this momentum for next 2 to 3 years. Anything beyond that will be very difficult to share right now.
All right. Thanks, sir.
Thank you.
Hello. Thank you. The next question is from the line of Chavli Sharma, an individual investor. Please proceed.
Hi. Good afternoon, sir. Congratulations on achieving good set of numbers, sir. I would like to know regarding the refrigerators, sir. Actually, are you going to produce latest models or existing models only? My second question is, are you having any plan to produce front-loading washing machines in future?
We as a company level, we are always looking at new product categories in order to increase our wallet share with our clients. And the way the market trends are changing, where consumer behavior is also changing, and there is a subtle shift from the semi-automatic to top load and top load to front load. So we are at a company level already, developing such platforms in order to meet those evolving demands from our clients and customers. And as far as refrigerator is concerned, the capacity what we are putting up, it will be capable of making both DC and FF category of refrigerators. And the supplies and the production will happen as per the customer demands.
Yeah. Thank you very much, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Achal Lohade from Nuvama Institutional Equities. Please proceed.
Thank you for the follow-up opportunity, sir. Any update on the laptop opportunity?
Nothing as of now, sir.
Nothing. Okay. Sir, second question I had was with respect to, the components PLI, anything we would look at, any opportunity we would consider in this? And is it part of the meetings?
Definitely. So this is not part of the campus, what we have guided as of now. But we are always exploring business opportunities. We are looking at this also. We are talking to some of the probable partners in China and Taiwan. If something comes up, we will be definitely participating in this electronic component scheme.
Understood. And just last question, if I may, I don't know if you will be able to answer, sir. I just wanted to get a sense, given the significant outperformance to the industry growth, is it possible to get some number in terms of CBUs? What would be, the industry's outsourced CBU mix, and what would be our market share? Any ballpark number for FY25?
So normally we don't share these numbers, but I can very well tell you that we might be in kind of a leadership position in outsourcing category now.
Right. Fair point, sir. And with respect to the EV business, so I think there was one question. So the electric vehicle, that the client partner is yet to get the approval. So there is no capex, there is no revenue or anything of that sort. And let's say theoretically, if this was to come through, let's say in this month, this approval, how much time would it take to set up, and what kind of asset turn would we look at?
It will take 3 to 4 months for us to put up the capacity. The capex will not be very large, and the asset turns will be very good with it.
It will be a low margin, high asset turn business because initially it will be largely assembly, and as the localization speeds up in India, then the margins will start seeing some improvement, but also with increased investment. Initially, it will be largely a assembly kind of a job which we will start.
Understood. And just last question, if I may, with respect to the electronics segment, I think we've had about 350 crores of revenue. How do you see that shaping up over the next 2-3 years? So what kind of revenue size we can look at, and what categories we could probably look at?
So we have already guided for next year. In that, we think we will be in the ballpark of 500 crore in that segment. And we are working towards it. We are probably going to talk more about it once we have some more clarity. But we think that 25-30% growth should be easily possible in that segment. It is a very small segment for us as of now. And things can actually evolve quite significantly if we work towards it. And that's the focus area in the company.
Got it. Sorry, I'm again saying last. Sir, in terms of from an EMS perspective, just I need the answer from an industry perspective. In terms of the margins, how do they rank in terms of RAC, ref, and washing machines?
The washing machine has the highest, and then ref will be there, and then probably RAC will be at par or slightly lower than this.
Understood. Perfect, sir. This is very helpful, sir. Thank you, and wish you all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Vipraw Srivastava from Phillip Capital. Please proceed.
Hello.
Yes,
Vipraw. Thanks for allowing me a follow-up. So quickly on the room AC demand side of the story, so obviously the commentary from other players on Southern India has not been very positive. So what's your take on the demand side, and how do you see it evolving over next fiscal year?
I think I have answered this question, but just repeating, I can answer it for myself. At our end, we continue to foresee good demand environment, and I have taken into account all the basically forecast, etc., while we are giving a guidance. So we remain pretty confident that we should be able to meet our guidance for next year.
Sure, sir. Thank you. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, I take this as the last question and would now like to hand the conference over to the management for closing comments.
I thank all of you to participate in the conference, and please feel free to contact me or the company for any further questions or any clarifications you have. Thank you. Thank you very much.
On behalf of JM Financial Institutional Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.